As we look at the S&P 500 set to have a record closing high, do you think technicals or fundamentals are the most important driver for the S&P at the moment?
Listen, this is all a one-way train with liquidity. You know, we threw fundamentals out the window a long time ago. And so it's just, you know, the market, like the horse has the bit between its teeth and it keeps running. If you look at a stock like Tesla up 40% in 5 days, and that's almost unheard of on such a large market cap just on the split. And so, you know, this will run out of steam at one point. Guessing it is a tough game. You know, usually will be price exhaustion. The S&P is interesting. It's 54% off the low to an old high. In almost any other environment, when something comes at 54% to an old high, it'll pause and there'll be a correction. But we're in a really strange environment.
I mean, if it is all liquidity driven, as you say, Mike, is gold or even Bitcoin a better bet? Does that same factor kind of apply with more rationale to those types of assets as opposed to equities?
Listen, it feels more intellectually sound because store of value is just store of value. And so, listen, gold's worth 10 trillion. Like our biggest company, Apple, is not even worth 2 trillion. And so, like, why is gold worth more than Apple? Just because it is. And so the pricing on those can go further and you can kind of intellectually make sense of it. Where in stocks, you normally do some crazy discounted cash flow model and say, oh, this is going to keep growing and it's cheap. I think we're way beyond that in stocks like Tesla. Tesla is like a Bitcoin. It's money all of a sudden, and it's trading with that same frenzy. And a lot of the story stocks are. This is a speculative bubble. Make no bones about it.
I'm trying to figure out, Mike, based on your comments, what you're actually doing. So are you buying gold and getting out of stocks, or are you buying gold and stocks and Bitcoin?
I'm along a lot of gold. I'm along a lot of Bitcoin. I'm short a lot of U.S. dollars against euros and sterling and other currencies. And I've missed this equity market and sat here and watched, 54 straight percent go by. Well, not 54%, but at least the last 30%. Now, listen, it's all correlated. And so if I had a fund, we'd be having a great year. Our company, Galaxy's having a great year. And so I'm not complaining. It's just, this is all basically the same trade. It's liquidity pushing assets up.